Welcome back to the Junius Maltby channel. Glad you could join me. Sorry I've been away. Taking a look this morning, Federal Reserve survey that was done. This came through CNBC. Looking at holding on to inflation through 2023, the year 2023, 92% expecting the Fed balance sheet to grow. Unbelievable, 92%. And that's a significant amount. The size of it being $9.7 trillion, 43% expecting additional Fed actions. And I can only imagine what those actions are going to be. A big standout here is the next Fed hike. So them not even raising interest rates, most believing it's not going to occur until 2023, the year 2023, which means just more easy free money, perpetuating the cycle of an equity bubble, which we are in, which is still occurring. Investors are being forced to pump money into equities, into investments, just to get rid of dollars because they know the dollar is in a state of decay. We're going to see that in the next article that came out on the NASDAQ website. So let's move on. We've talked about the Fed already disclosing they plan to keep interest rates above and accept them above 2% going forward. Now, in this survey, 41% of those, I guess, whoever they are that surveyed, believe it's going to be greater than a year that this is allowed. Of course, this is causing investors to hedge against asset inflation with gold. Very favorable article here, very bright article when it comes to its view and its looking at gold, talking about the drops in GDP in history being, this is the most damaging one, record unemployment, impending inflation. This editorial piece here is calling this a tragedy for the U.S. economy, with the U.S. Federal Reserve reiterating its dovish stance and refusing to acknowledge inflation in the form of a soon-to-be rupture asset bubble. Things could get a lot worse, according to the author here. Now, in the meantime, the U.S. is slumping ever deeper into recession. In quarter two, GDP shrank by an annual rate of 33.9%. As we've discussed, this was the most drastic decrease in U.S. history. Simultaneously, unemployment, while down from its record 14.7% high in April, is still touching levels not witnessed in over 40 years. Similarly, attaining new highs is the M2 money supply. The amount of paper fiat, the amount of unbacked trash coupons and monopoly money circulating is reaching all-time highs. Of course, you've been part of this channel. The more paper out there circulating, competing for a fixed amount of precious metals, the higher it's going to push the price of those metals valued in that fiat trash paper. Investors heeding the dollar's gradual decay are pouring more money into the stock market as a means to hedge against value loss, with additional helicopter money to come. We're seeing more talk of stimulus, greater stimulus. This bullish bias is bound to continue, creating an even bigger equities bubble and fostering further financial instability and volatility on a dramatic scale. Well, investors are now doing what you on the Junius Maltby channel are doing, turning to gold. Earlier this month, we already discussed this, Warren Buffett acquiring 21 million shares of Barrick Gold. The big standout here was what he did. He swapped out Wells Fargo and JP Morgan, which means he's dumping his positions or eliminating certain positions in other parts of the U.S. market. I would say specifically U.S. housing and real estate. Again, Warren Buffett dumping Wells Fargo and JP Morgan in order to acquire positions in a mining company. Now, I would have rather he took positions in physical gold, but we all know his addiction to dividends and such. However, I think many of you are several steps ahead of Mr. Buffett and those with Berkshire Hathaway stock at this point, being that you are acquiring physical metals, which I think is going to be the next big play and come into very short supply here as demand for it increases dramatically in the times coming. Now, we all know gold has been money for 10,000 years. However, in most recent times, if you look at it through the lens of today and in the recent past, During the 1980s, gold cemented itself as a hedge against much of the same inflationary environment that we are careening towards today. After the economic boom following the Second World War, unemployment fell to its lowest ebb, and as the standard of living increased, natural inflation rose as well. But employers couldn't keep up with this rising standard and were forced to cap wages, leading to an exodus of workers and unemployment rising in line with inflation. A reminder, gold was only legal to own since 1974, and during this backdrop, when this occurred, what did gold do? It soared 1,800%, and ever since has kept its value, even amid the worst recessions. And all of the things that took place, the ongoing market collapses, everything that's taken place, gold has maintained its value and preserved wealth. Think about it. The Fed, the markets, every metric, every piece of data and news, all of the information is essentially telling you the play here. It's like you can see the future. You know inflation is being cooked into the books. It's being accepted, discussed. It's going to occur. And it's going to come at a rate higher than I believe we even expect. The bet is there, the outcome. One of the old funny Irish proverbs is, the less you bet, the more you lose when you win. Hopefully you heard that with the Irish accent there. The less you bet, the more you lose when you win. I'm pretty sure gold's a winner here. As a matter of fact, I'm certain of it. And the less we bet on it, well, the more we're going to lose when we finally do win. I think the investing community, Wall Street, is soon going to wake up to what needs to be done here. And we're going to see a rush for the exits, a rush for gold. We're already seeing it somewhat with just the recent moves, certain pension plans taking large positions and acquisitions in physical gold. We've been seeing the wealthy, the elite, taking physical possession and privately vaulting gold, dating back over a year now in preparation for these very events that are taking place and unfolding now. I think some of them saw this coming. You've been fortunate, those of you out there in the comments down below and on the side margin who are part of this channel and part of many of the channels in the stacking community, you all know what's going on. You see it very clearly. Some of you better than I do, I believe. So what are we doing now? What is the next step? What is the moves to be made? Just keeping on what we're doing, I believe. I think that the prices we're seeing in metals right now are somewhat flat, somewhat stagnant. It's pausing, if anything. I mean, we've seen some recent jumps. Gold's again rising and knocking on that $2,000 door. It's going to breach it again. There's been some significant resistance there, but I think it's going to once again pass over that 2,000. And at some point, there will come a time where it will not fall below it again. It'll remain above 2,000 an ounce. Silver, the same. I don't know what those numbers are. Again, it's always a pretty volatile metal, volatile chart. A lot of industrial demand on it. A lot of it is tied to other parts of the economy. It's not as monetized as gold. It's not looked at the same way. However, I do believe it is going to follow in gold's footsteps. And we will see silver breach levels we haven't seen in the past and remain above them for the future. So thanks for tuning in here today to the Junius Maltby channel. Appreciate each and every one of you that is part of this channel, supporting this channel, and participating in it always. Again, just a reminder, some motivation, gold motivation here, to remain gold-pilled, to keep on stacking, and keep on doing what you're doing, taking this metal off the market so that it cannot be manipulated. It's out of the hands of the banks, out of the hands of the Fed, and returning the wealth and the power of wealth back into the hands of the people. All right. Thanks for tuning in. Have a good day, all of you.